Hi, everyone. Thank you for tuning into our Trader Live AMA presented by Crypto.com Exchange, where we invite trading partners of various backgrounds to share their experiences, opinions, and observations of what's happening in the crypto space right now. The Crypto.com Exchange is a fast, trusted, and secure platform for advanced crypto traders, boasting a powerful order book that features competitive fees, an impressive tech stack, deep liquidity for over 700 spot and derivatives trading pairs, USD, Euro, and GBP on and off-ramp solutions, and rewarding programs like the Broker and VIP program. In this episode, we have Jason Atkins, Chief Commercial Officer of Auros. Auros is a leading market-making and algorithmic trading firm built by industry veterans with over 20 years of experience. The firm achieves daily notional turnover in the billions of dollars while delivering unmatched liquidity solutions. Through its pioneering Auros Liquidity Solution Suite, the company accelerates ecosystem growth and empowers partners through DeFi engineering, OTC execution, and strategic investments, providing critical guidance to projects throughout every stage of the life cycle. Before we start, please remember that the opinions expressed in this AMA are solely from the participants. They do not constitute trading advice and are not representative of the opinions of the Crypto.com Exchange. Let's get started. Thank you for joining us today, Jason. I know you have extensive experience in liquidity, provisioning, and management, so we're very excited to have you share with us your experience and perspective. Let's start with something about you. What's your background and past experience?
Thanks, Connie. Great to be here and great to speak to everyone today. My name is Jason Atkins. As Connie mentioned, I'm the Chief Commercial Officer here at Auros. My background originally is in traditional finance. I spent the large majority of my career in the FX and rates space at various investment banks around the world. As you can probably hear from my accent, I'm from Sydney, Australia originally. I moved to Asia around 12 years ago, originally moving to Singapore with an investment bank, again in macro FX and rates, and then moved to Hong Kong after that to work with a couple more investment banks. My move into crypto personally started around 2017, trading some on my personal account, still while I was in the traditional financial system, and then moved professionally into the space in 2021 when I joined a firm called Matrixport, which is a financial services platform, and then finally joined Auros at the end of 2021 when I joined as the head of BD and partnerships here. The role initially was designed around repurposing our technology stack, which Connie alluded to already, repurposing that to work with external partners and find ways to leverage our trading capabilities and trading expertise, using that stack to help external partners achieve their goals.
Great. How did you get into the crypto space?
So I think 2017 on the personal side was obviously a pretty hype time and a lot of headlines around the adoption of crypto. And I think a lot of people on this call probably gained a lot of interest around that period of time. So that sort of started a personal passion and a personal interest in what was happening in this new financial system. As someone who was part of the traditional financial system, it was interesting to see new and nascent ways of addressing problems that had been occurring in the traditional financial system and needed new technologically based solutions to solve them, giving more access to a lot of people, giving a lot of access to people that traditionally weren't able to access certain product types or certain investment vehicles in the traditional financial system. So that was 2017 on a personal level. Professionally, I actually ended up working at one of the investment banks I used to work at with a trader on the China vol side, who ended up becoming a co-founder of a trading financial services platform called Matrixport I mentioned before. And I ended up catching up with him, and he said that the space needed more people from the banking and institutional world to start this institutional adoption curve. And this was quite some time ago, before ETFs were a thing. And I guess he was sort of early in that, in thinking about bringing the sorts of people that can help with the adoption and bringing the right sorts of investors into the space. And so I joined that firm in 2020, 2021, and spent a lot of time understanding where institutional adoption was at that point and where the gaps were and inefficiencies were. And that really pulled me deep into the rabbit hole and ultimately ended up leading me to join Auros, and working on these solutions for the last 3 years now at the firm has really helped to help me to understand where the gaps are, the inefficiencies are, the opportunities lie, and where improvements need to happen in this financial space as it becomes, I think, undoubtedly part of the future for all financial products.
That's quite a journey into the crypto space. Can you tell us more about the Auros origin story, why and where it was founded?
Yeah, so that happened a little bit before my time. So 2019, the firm was founded by two ex-Optiva alumni. So Optiva is a traditional finance, high-frequency trading firm. Two of those ex-Optiva alumni formed Auros. One of them was a systems architect building out the systems and the technology stack that we use to trade very, very large amounts of notional now to this day. And the other one was a trader that was very experienced in market microstructure and all things that go into trading large amounts across inefficient financial markets and finding inefficiencies there and the provision of liquidity. Really what comes to the core of it was that first 2019 to 2021, when I joined the firm period, was about building out that technology, building out robust, reliable systems that are able to safely, sustainably, and ethically, importantly, provide liquidity to financial markets. So that period was really about providing liquidity on behalf of the firm to the market as a proprietary trading firm. And then as we entered 2021, one of the founders identified the opportunity to use that same technology to provide that same service or liquidity to external partner projects that have the same needs. So we started having conversations with projects that really came to us and said, we need help with our liquidity on exchanges like crypto.com and other exchanges as we launch our token and beyond. So through that full life cycle, and helping projects to have sustainable liquidity depth and tight spreads across their books to allow their communities and their retail participants to buy into the token, hold the token, stake the token, and really participate in the forward-looking future prospects of that protocol. And that was a really important part of how we pivoted a little bit. We still continue to trade as a proprietary trading firm, but using that same tech stack to do the same activity actually helps a lot of these projects with that early stage, getting from an idea on a page to launching a token to having sustainable liquidity and ultimately seeing growth across that token. That's reflection of the work that they put in on the protocol side, but also a reflection of the liquidity being able to support that growth.
Thanks for the elaborate explanation, Jason. So I know you've played a key role in establishing Auros Liquidity Solutions. Can you tell us more about its founding story and mission?
Yeah, so that's almost like phase three. So phase one was the building the technology stack and trading for ourselves, ultimately providing liquidity to pairs like Bitcoin and Ethereum naturally, as they are opportunities for a trading firm. Phase two was pivoting that technology stack to then provide liquidity to external partner projects. As we started to establish those relationships with partners, they realized that the capabilities of the firm went well beyond just a single token launch or providing liquidity after a token launch. They started to understand that our technology enabled us to help them with other parts of their needs. And that included things like venture investments. So we were talking to projects at a very early stage, at the pre-seed and seed level, where we were able to identify areas where we could contribute to their success and invest our capital off our balance sheet to help provide them the early stage funding to get from ideation to product launch and beyond. So that's the ventures aspect. We also then had inbound requests about, can we utilize and work with you to come up with ways to execute in the market algorithmically without having market impact? That can involve treasury management strategies, building out runway, working with communities to ensure that they're not having an impact on their own liquidity as they're executing those sorts of things. And that's where our OTC algorithmic execution desk came from. So you can sort of see how as these partnerships grew in this scope, it naturally led itself to Aura starting to think about how can we build out a broader liquidity solutions platform that helps projects at every stage of their life cycle rather than one single area. And that's where Auros Liquidity Solutions was born. And the final aspect of that, so there's four pillars. I've talked about strategic market making, token launches, venture investing, and then OTC algorithmic execution services. The final pillar of that is what we call the Auros Accelerator. And that's where some of our system architects and developers here that are very experienced in the crypto space, in DeFi, in building to new protocols, because we become early participants in those protocols, work directly with the teams on product ideation, building their product in a way that firms like us, including our competitors, would then go and use it. And really that's reducing the friction to them getting to launch. So helping them to get the product built the right way the first time, so that they're not looking back and asking firms like us to integrate or trade and ultimately finding out that they built it slightly wrong, or they have to change something, or it takes longer than expected. So we see ourselves as early stage participants, both investing our time, with the Auros Accelerator, our capital through Auros Ventures, and then ultimately our sophistication through launch and beyond to help projects go from a dream and a deck to an actual product to a real community and a token that reflects that. That's really where Auros Liquidity Solutions came from.
That sounds really amazing. You guys are providing a really full and comprehensive suite of services and solutions. So how is Auros Liquidity Solutions an extension of Auros, which started as a proprietary trading firm?
Yeah, so I think if you think about what a delta neutral proprietary trading firm does is that they provide liquidity in markets by the very nature of how they trade. In other words, we're putting large bids and large offers into the market on various pairs and products across all exchanges. So we trade on currently around over 50 different exchanges on centralized and decentralized venues. We trade over 3,000 instruments. That very act of trading those tokens, those pairs, allows us to provide liquidity. We are in the books smoothing the trading process for all market participants just by the very size and nature of what we're doing. And that's Auros Liquidity. Like that's the Auros proprietary trading business. Auros Liquidity Solutions is just an extension of that activity. As I've said already, it's just doing that activity on behalf or helping projects to do that by creating commercial partnerships with them to provide that liquidity at that crucial bootstrapping stage. We kind of call it cornerstone liquidity provisioning because we act as sort of the baseline liquidity that all other liquidity can trade off the back of. And that allows participants of any size to have confidence that when they need the liquidity to buy or to sell, they can get in and out of that token frictionlessly and without having concerns that at the moment when they need liquidity, it's not there. Having a key cornerstone partner that is incentivized the right way and importantly has the capabilities, and that's really where the technology stack comes in, is an important part of launching a token and making sure that tokens have the support they need to be successful and reflect the work that the project team has put in.
Thank you. So I think we mentioned market making earlier. Just now on the topic of market making, it's not something that everyone is familiar with. Have you heard of any interesting misconceptions about market making that should be debunked?
Yeah, I mean it's something that goes even outside crypto. There's concepts around market making from the traditional financial world. You know, there's books like Flash Boys written by Michael Lewis that talk about the fastest traders in the world and how they make markets. The act of market making, put simply, is providing bids and offers in a market and creating what to most users looks like price discovery. In other words, finding the point at which the fair value of a price is found is behind putting bids in, creating the ability for someone to sell, and then putting offers into the market, creating the ability for someone to buy. And if that price is too low, someone will buy it off you. If that price is too high, someone will sell it to you. And ultimately, that's how you have a supply-demand dynamic that ultimately leads to price discovery. Market makers play a key role in helping markets with that price discovery, creating efficient, liquid markets so that people can have a fair value of something and they know where they can buy it and where they can sell it. The biggest misconception, I think, that people have is that there's this oversimplification that market makers are more powerful than every other market participant and move markets around higher and lower. Ultimately, the biggest mistake there is that people think that market makers know the direction of the future or where things are going to be going tomorrow. We don't. We're delta neutral. We don't take directional views on the market. We're not predicting Bitcoin will be higher tomorrow or lower tomorrow. We don't do those sorts of things. We're in the books on both sides at all times, helping with price discovery. And that oversimplification of like market makers know better than us where it's going makes people feel like it's a PvP, us versus them dynamic, which is really not a great conception to have because market makers are there to help all participants be able to trade in any direction they want versus the market maker directing which way the market goes. So I think that misconception that we're some all-powerful moving markets around, I'm reticent to say the word manipulation, but most of the time market makers are in the books around the fair value of prices at a fair spread and in a fair amount to allow people to trade in different sizes. And when those signalings come through, the market moves up and the market moves down in a natural and organic fashion. And market makers don't have anything to do with directing that. Ultimately, it's really important that market makers and large participants in the market trade in a delta neutral manner and they're not taking directional bets on things. That's exactly how Auros operates. We try to look at assets agnostically, and we do not take directional bets on things. We're just there to provide liquidity to the market. And the very act of doing that, we're able to trade at multiple venues in billions of dollars per day. And that's largely how a proprietary business works.
Now, on liquidity, why do we need market makers or liquidity partners on exchanges?
Really good question again. So without market makers, if you were to remove market makers that, again, are not directional and don't have any reason to be buying or selling an asset, if you remove them from the market, what you would immediately see is much wider spreads. So the cost of trading from the middle of the book, the bid-ask spread would blow out a lot. The depth at which that would also have behind it, in other words, how much you could buy at a time or how much you could sell at a time within that bid-ask spread, would fall quite precipitously, because organic trading activity ebbs and flows with sentiment, versus market makers who are there in the books trying to trade as much as possible. They're there to trade as much as they possibly can with all market participants, and being in the book at all times is important. It reduces volatility, it reduces friction to trade, it allows market participants to trade at any time they want without having the asset price move up and down in very, very volatile fashions on very, very small amounts. So ultimately, the more liquid the book is, you can think about it as the more stable that asset price will be. When I say stable, I don't mean like a stable price doesn't move, but I mean stable in the sense that excessive volatility relative to the market movements, broader market movements. You can think about Bitcoin or Ethereum as good barometers of where things are going. If Bitcoin goes up a lot, the asset will move up in a relative manner to that. Bitcoin goes down a lot, an asset will move down in a relative manner, to simplify it. What you're trying to avoid with liquidity is that your asset overshoots one way or the other. In other words, it goes way, way too high unsustainably, or way, way too low unsustainably as well. That's the importance of liquidity. It reduces that excessive volatility and allows assets to trade more sustainably within the book.
And what are the challenges and risks of liquidity providers and market making?
Yeah, so it's not a riskless activity. There's not obviously we have to put bids into the books, and if we get sold to, we now have a long position. If we get paid on the offer, we now have a short position. We have to hedge that out using other exchanges, using other asset classes. We're obviously there to provide the liquidity. We're not taking directional bets, as I've said a few times. So the risks are that we have a market moving one direction, liquidity elsewhere is insufficient, and we end up with positions that we have to hedge out in other ways. But ultimately, the technological sophistication of our systems, the speed at which we operate, and our ability to measure where markets are across all venues at all times, as I said, we trade at 50 different places, allows us to ultimately reduce that risk to an acceptable level, such that we're not excessively exposed to, say, large volatility events or one directional moves in the market. The speed and technological sophistication of our systems protects us from that. But ultimately the risks are, the bigger your bids are in the book, or the bigger your offers are in the book, the more financial risk you're exposed to if you are wrong about that price level or the area at which you're putting those bids and offers. But obviously we've spent the better part of 5+ years now building systems that protect us, reduce that risk, and allow us to stay in the market. Because if you think about a market participant, if they constantly are exposed to excessive risk or losing money, they won't do that activity as much. And as I've mentioned, not having liquidity providers is a bad thing. So you really want as many sophisticated, technologically driven firms like Auros as possible to allow that market to healthily grow and become less and less volatile over time as it matures.
That's really helpful information for our audience and retail audiences. So, how important is liquidity management and provisioning at different stages of the project lifecycle? And what is the relevance for traders? There's two
Yeah,
questions.
so no, that's all good. They're linked and similar, so that's fine. Yeah, it's really important the earlier in the cycle that a project is. If you think about a token launch process, it's very much in the early days about price discovery. What is that project worth? What is the work that has gone in pre-TGE? What is that reflected in the token price? Some people think about it as fully diluted value of a project or market capitalization. So what you're really trying to do is bootstrap that process to allow for healthy price discovery to occur and establish what that is. I talked a little bit about volatility just before. Reducing that volatility in the early stage is really important. So liquidity at launch is essential. I think good liquidity can be the difference between a successful and an unsuccessful launch, and how you define that depends on your perception of the market. But ultimately, what we're trying to avoid is a great project that has put in great work and has a really good forward-looking outlook being impacted by a very volatile token price that doesn't have price discovery, and people can't determine what that project or what that initiative is worth in the market. Over time, that liquidity will naturally grow and be healthy. I talked about cornerstone liquidity before. Liquidity begets liquidity. As you have healthy markets and healthy, efficient trading conditions, more participants come in. That increases liquidity further. And ultimately, the end goal is that you end up in a situation where so many people are actively trading your token because of the forward-looking expectations on the token or their existing positions, that you no longer need cornerstone liquidity. It's a very rare occurrence. There are a few things that people can probably point to. Bitcoin, Ethereum don't need market makers as much as other tokens within the top 50 or top 500 pairs. But ultimately, some form of liquidity support is required at the very early stage and then throughout. And it's really down to the project to understand how important deep books and liquidity is for them. And we operate with projects at every stage of the life cycle. So as I've said, very early pre-TGE on the ventures side, the Auros Accelerator side. And then as they approach TGE, our strategic market making arm swings into gear to help them launch the token, manage that launch with the exchange partners like Crypto.com, get them through that initial launch period, and then increase and manage liquidity beyond for multiple years. So we have mandates with partners that go for 1, 2, 3, 4 years, and constantly keep looking at iterating, ideating, and increasing that liquidity as much as possible to ensure that they can grow and the liquidity can help them to grow with it, or reflect that growth with it.
Awesome. And for a trader, how could one evaluate whether a project has good liquidity management?
Yeah, so it's really it's easy for firms like us because we have a lot of market data. We track liquidity. So we have systems that track how deep the books are and how wide the spreads are or how tight the spreads are. All of those sorts of things are easy for us to see. For a general trader that's just trying to evaluate a project on a given timeline as they're thinking about maybe an investment into that token or even exiting an investment in that token, it's really important to take a look at some of the basic public tools that you can look at. Have a look at the Crypto.com books, have a look at how that liquidity remains stable, how that reflects on price movements. If liquidity looks poor and the price is moving around a lot, maybe the liquidity is not sufficient and the market maker is not doing a good enough job. But ultimately, you can measure those sorts of things using publicly available tools, CoinMarketCap, CoinGecko. Look at the plus and minus 2% spreads, depth on the books, along with the spread in the book. And that will give you a fairly good idea of how much you can transact and how reliable that liquidity will be when you are trying to transact. And then looking at it over a period of time, seeing how consistent and reliable that is. I've said the word cornerstone liquidity before. It really references the fact that it has to be there as a foundational level as much as possible, if not at all times. Or as, for example, on our market making mandates, we provide spread depth requirements that we guarantee to the projects, and we do that for a guaranteed amount of time. I think in the last 12 months, our average uptime on meeting that liquidity provisioning for projects we work with is around 99%. So that's reliability. That gives you the sense that all the time, Auros will be there on the bid, on the offer, providing liquidity to market participants on either direction, and gives them confidence to know what good liquidity looks like and what reliable liquidity looks like. So there's some small things that people can do individually or investors can do individually.
Awesome. So we spoke about Auros before. Just circling back to the Auros, how do you think Auros is uniquely positioned in the market, and what is its long-term goal?
Yeah, that's a really good question. It probably goes back to speaking about the full suite of products that Auros Liquidity Solutions is providing. One of our unique propositions is obviously our market-leading technology stack that allows us to be one of the largest trading participants in the market by volume globally. The other things that add to that go into the Auros Liquidity Solutions suite. So that talks to things like Auros Accelerator, where we have crypto native developers, DeFi traders working on new and nascent protocols at the frontier areas of crypto and allowing us to be early and trade and participate in these new novel DeFi architecture systems that allow us to really be part of what is the forefront of where crypto is going and provide support to those partners that are building these things. Beyond that, obviously, we have the token market making part of the suite that allows for projects to get a sustainable and healthy launch. As we've talked about, our ventures arm is ready to support with capital at the early stage to help them get from an idea to actual product launch and go-to-market strategy. And then, of course, we've got that post-launch support as well that allows them to manage treasury, to allows them to operate in the market without having a significant market impact using our algorithmic execution suite and working with our OTC team here.
That's very thorough. So, just now on crypto, we've seen a lot of market movements in crypto recently. What do you see as a dominant and upcoming narrative?
Yeah, I think 2024 has been a super interesting year, and I'll probably preface this by saying, like, not financial advice, and obviously do your own research. I know you prefaced that at the start of the call. We've seen a pretty interesting year with the start of 2024 having the institutional adoption. I spoke about this earlier when I was talking about my history. I think it's a really important part of a slow burn cycle of creating further global adoption. So the ETF introduction at the start of the year, there was a lot of hype at the time. And then obviously the market sort of saw it was a slower than expected process, and crypto has a very short attention span. And so we're a little disappointed in the initial activity that may have occurred. But ultimately, that is an opening up of the rails for institutional participants to come in and adopt. That will be a long-term pulse of engagement and participation from a new source of capital that wasn't there before, which means that we don't need existing crypto native or existing crypto participants to just increase their size. We now have new access points for new people that have never touched crypto in any form before to be able to enter into the market and really drive that interest and adoption across the world. I think that pulse and that signal will continue for many, many years to come. And we're only going to see more and more announcements around pension funds, hedge funds, investment funds gaining further exposure to this. I think to extend on that, we've seen a lot of narrative recently about sovereign adoption of Bitcoin. Of course, a lot of people have seen Donald Trump's election, and then obviously his thoughts around potentially a Bitcoin holding by the US government. There's obviously governments around the world that are thinking about adopting this, holding this as an asset class similar to gold as part of their reserves. Those sorts of things will continue to be debated and looked at over the coming years. They're not going to be a single day decision and a single day catalyst. They will become focal points as proponents of institutional adoption start to realize that the more adoption there is, the more that their investment will perform. And therefore, countries start to realize that participation is the only way to be a part of what is a nascent and new financial system that is going to sit on top of the existing way of holding reserves and investing in different asset classes. So I think that's going to be continually a theme, not necessarily a short-term like dopamine hit catalyst, but it will be a continual theme through the coming years. Obviously, we have a pretty big sea change in the US government coming through with Donald Trump getting elected that I mentioned. We've got to see how he fulfills on a lot of those promises that he made. I think the first 100 days of his presidency, as with all new presidents or even returning presidents in Trump's case, is really important to see how they deliver on those promises. So I think Q1, Q2 next year are going to be critical to watch whether a lot of what he's said is going to be matched by the people he has put into the positions to deliver on those promises and really push the adoption further. But I think we've moved past the resistance phase where crypto was seen as a questionable asset class. We've really entered into the point where people have realized it is going to be a part of the financial system looking forward. And now they're trying to answer the question of how much should they be exposed to it? How can they be exposed to it? And what sort of places are the venues they can trade, like crypto.com? Where's the best liquidity sitting? And how can I get the exposure I need in safe, sustainable fashions? And that goes back to liquidity again. If you don't have that underpinning of liquidity, a lot of these questions become very hard to answer for investment managers, risk committees, even governments to say that I can hold this asset because it is an important part. But if it's too volatile or illiquid, it becomes a problem for them to actually execute on that mandate that they've come to the conclusion about. So those are some of the short-term catalysts on a global broad macro scale. Beyond that, very excited around some of the intersections between AI and crypto. Obviously, I know there's a very big buzzwords at the moment, but we're seeing some really interesting things with partners that we work with, firms like Aether, which is a decentralized compute network that provides the compute behind a lot of these AI applications on crypto, both also in the Web3 world, but also bringing in Web2 participants and allowing them to purchase compute credits as well within the Aether network in a Web3 manner and use those credits to purchase AI compute workload on the Aether network. We're a key partner of them in providing liquidity across everything they do, including their token, but we've worked with them for a long time, almost across the whole suite of Auros liquidity solutions to help them have a very successful launch and working with them for the future of what that means for the liquidity of the Aether token, for the way that they execute those compute credits on chain and in the market. And there's more information out there if people are interested on the web.
Great. What's ahead of us is very exciting. So, final question, Jason. How do you think the crypto space will evolve, and what does the industry need for further mainstream growth?
That's a very good question. I think further evolution goes back to what I was talking about, institutional adoption. It's going to come down to pension funds, investment committees, sovereign wealth funds, governments looking at exposure to this, establishing what's an acceptable amount that they can have exposed to Bitcoin, Ethereum, and other parts of the industry. It will take time. I think ultimately institutional adoption is not a quick decision. There's a lot of safeguards in place. There's a lot of rules in place. There's a lot of regulation in place around how these firms can invest and how they can get exposure. So I think ultimately, when you ask what does the industry need for more mainstream growth, I think we've had the catalysts that open up the pathways. We now just need time and understanding that it will take time, but it will be a constant pulse of positivity coming through, demand coming through from places that we didn't expect, exposure being greater than expected, people increasing exposure, and that will help to put more capital into the space, drive more adoption into the space, and ultimately fund and enable more platforms to be able to build new and interesting things that extend the financial system globally and improve upon what we already have in crypto.
Awesome. We've come to the end of today's episode. So thank you, Jason, for taking the time to share so much with us today. Before we say goodbye, Jason, is there a final message you have for those who have tuned in?
Yeah, definitely. I think for those that are listening, obviously crypto.com users and people that are interested in trading crypto, it's really important to spend the time to educate yourself and understand the importance of liquidity across the market. There's a lot of misconceptions we talked about, and there's a lot of oversimplification of concepts. Auros is actually publishing some papers around educating the market on what market making is, what liquidity provisioning is, and the importance of that. And I would honestly ask people to go and look those things up, read into them, and understand the liquidity you're trading against and how that improvement in liquidity will benefit all participants. I would also stress that if there are projects out there and teams that are out there that are looking for liquidity support across Auros Liquidity Solutions full suite, to reach out to us. We can provide our Twitter. I think it's Auros_global on Twitter. If you look us up, we can reach out through DMs, and we can obviously engage and interact with you guys and start to understand exactly what your needs are. And if there's ways that our technologically sophisticated firm can help you, we're more than happy to look at solutions for anyone that's out there.
Amazing. Thank you, Jason. And for the audience today, you can follow Jason Atkins on LinkedIn. Be sure to follow Crypto.com Exchange to stay informed about all our upcoming events and announcements. You can follow us on X at cryptocom_EXCH, as well as our official Telegram channels and our YouTube channel, where this AMA will be uploaded after today. Sign up to Crypto.com Exchange on crypto.com/exchange. Okay, until next time, thank you everyone for tuning in. And thank you, Jason, again.
Thanks, Connie.